How are you reading this hope getting built in that you and I could be having this conversation over a coffee near your office in a coffee shop, and that is not very far away?
I'd love to be doing that actually with you, and hopefully that will happen soon. See, I don't think we're following a dissimilar pattern to what happened, back into, if you take September, October of last year, when the UK, US, Europe all went through the same problems we're facing now. The market initially kind of, took them from the highs down by, 5 to 8%. And then you just saw them, continue to rise thereafter. So I think you're right in what you've said in that, the number of cases coming down is obviously, a very big positive. I think the key now, as it has been in the US and Europe and UK, has been that it will be the vaccination rollout. Because once that starts to gather momentum, then the confidence will start to come back in India Inc. And obviously, the kind of thinking will be more positive towards the reopening. And I think maybe you're getting some of those early trades starting to happen, that the vaccination will roll out very quickly. And it'll just be a sentiment changer. We'll all feel more positive. We'll see, again, light at the end of the tunnel. And this time when reopening happens, as it's been happening elsewhere, it's probably, more likely to stay than go through another kind of phase, a third phase of lockdown, which no one would want.
Yes, you're right, Andrew, that the fears and also a possibility of a third wave is also not off the table, but the likelihood of that being relatively weaker than the second wave, as the second one was weaker than the first wave, probably is also a point to discuss. And in the meantime, globally, vaccinations are only improving, and the speed, of course, players also. So that's something which is we'll cross the bridge when we reach there. But for now, the under-owned areas of the market, financials, autos, what are your views on that based on the kind of commentary you've been hearing and also the earnings which you saw recently?
Yeah. No, I mean, we haven't, changed our view, for the last, I'd say coming into the year, where our view was, we had to look at the reopening of the economy and those economy-facing sectors such as banking, including all the financials, really, autos, in terms of, consumer discretionary, and then industrials and energy would be the sectors which will lead. And that's not been, dissimilar to what we've seen elsewhere in the world. So we haven't really moved away from that. I mean, obviously, when you have these, temporary periods of kind of uncertainty, then, hiding in some of the defensive sectors is fine. But, the real money to be made will be from your economy-facing sectors going forward. Because once the economy, does start to recover, as we're seeing elsewhere in the world, and interestingly, if you look at Europe now, I mean, they're opening their borders. So, Asia's probably, 6 months behind where what we're seeing elsewhere in the world. So hopefully that will again buoy the markets as we see reopening of borders across Asia as well, not just into Europe.
As we just speak, even Brent crude prices have gone above the $70 mark, though the speed at which there's advancement on EV, number of players around the world, as well as in India, are only going up. But at the same time, there is a sense that global growth will be healthier and it's not very far away, the rebound, and hence probably crude is also factoring that in. What kind of portfolio hypothesis are you following right now, Andrew, when you discussion with your big clients, etc.?
Yeah. So, throughout the kind of the early days of COVID and coming through it, we took more of a barbell approach where you have, quite a number of, those defensive sectors like IT, pharma, and FMCG as your kind of core holdings. But as you move, as the cases started to fall, then you want to be more geared towards those economy-facing sectors, the ones which I mentioned. And of course, those sectors of the economy which are going to be full beneficiaries of the reopening. So, cinemas, retail, hotels, all fall into that category. But that goes back to your consumer discretionary part. So, all of these will play a part in our portfolio. So it becomes then, more of a stock picking kind of market, to kind of get the right companies which will be able to come out of this a lot quicker. Who's going to come out of it quicker? There's many hotel chains out there, but who's going to come out of it with the balance sheet, with the resources, and with the market share to kind of really benefit from the fact that we might want to kind of go and stay somewhere else apart from our own home as we reopen the economy. So all of these things I think will play out over the next 6 months on the hope that the vaccination rollout is speedy. I think the one risk that we still need to kind of think about, because you mentioned crude oil prices of over 70 is inflation. And I think, that's going to continue to keep markets volatile over the summer months, possibly not to the fact that the Fed will say anything to upset the markets. But, if growth, jobs and inflation are still kind of rising when we get to that meeting of the finance ministers at Jackson Hole in late August, maybe that will be the time the messaging starts to kind of be a little bit more hawkish from where we are today.
That is the one point which did give a lot of weakness in the knees to global participants. But then, the kind of point which came out on the table was that inflation rebound may be transitory. Which side of the argument are you in? Do you think indeed that would be a temporary rebound on inflation and it will go back? Or do you think that that's a reasonable risk for money managers across the world? Because some data seem to be suggesting that globally fund managers have raised their cash positions in anticipation of that risk.
Yeah. It does seem transitory in the short term, in that, as output rises, to catch up with the demand, because it's really been a supply problem, not a demand problem, then, prices should start to cool. And with demographics working in everyone's favor, then again, that would lead to kind of this be more transitory. My concern is this, is that as the world reopens and people start dipping into their huge amounts of savings, whether that becomes more stickier inflation, kind of from the kind of middle of June to August. So we'll have to see how those spending habits and what people are really spending the money in, and what's forcing inflation. Because if I looked last week, I think I saw that Amazon and McDonald's have both increased the kind of lower end of their wage costs, to attract workers. So yes, you'll get your jobs growth, but you'll also get wage growth, which again would lead to more spending power and then more stickier inflation. So that's the thing that we're looking for. The next few months, some of that base effect will start to wear off. So it'll give you some indications on inflation. But I think it's really the kind of June, July, August, which will give us that idea about whether it's, here for a longer time than just transitory. So I think that's why the market will probably be a little bit more volatile as data comes in and out, which is either proving or not proving that inflation's here.
Right. That's a very interesting and valuable point which you bring out, Andrew, that there's kind of a revenge demand which may come, be it go out and spending, consumption may just jumpstart because people have been indoor for 1.5 years, they've got savings and they would want to spend. And that urge could bring back stickier inflation. It's a very valid point, not very often discussed. And market will have to negotiate that. On the one hand, the benefits of economy jump-starting, on the other hand, the risks of rising inflation. My thoughts, I would want your thoughts on some of the strategists we speak to. The international brokerages are also now nudging their clients to look at the side market, which appears to be much more robust in terms of earnings and lesser under ownership as well over there. Are you also in your strategies started to looking in broader markets looking for value? If yes, what kind of themes are you looking at?
Listen, there's many themes, right? I mean, if within that, and that's why I said, in the broader market, when you look at the reopening, let's just take hotels or retail, there's quite a number of listed companies from large cap to kind of small cap there. So it's really, which of these companies will, benefit the most from the reopening? Who's ready for the reopening and can take advantage of that going forward? Because, you'd look to say, okay, in a hotel company, who's got the broader range of hotels across different price ranges, not just the luxury. But I think we'll all want an experience. And I think, if I was to guess, then, you'd probably, if someone said to me, tomorrow you can start, booking a hotel room and so forth, I'd probably go, towards the kind of, 4 or 5 star, because I feel a little bit safer. So I think that's what will probably play out initially. And then as the vaccinations roll out more and more, then I think people will become, more kind of okay in terms of saying, it's okay to now go to other hotels as well. But I think initially you might be a little bit more cautious. So it should benefit those hotels which, would have those strong brands, and you would feel that they would have all the norms in place to make you feel, from a health perspective anyway, secure.
Right, Andrew, always a pleasure chatting with you. Thanks so much for your time. Hope to see you soon once all of this is over. Let's take a short break on that note. On the other side of the break, we'll speak to the management of Borosil Renewables, one of the most liked stock these days in the market. We'll talk about numbers with the management. Don't go anywhere.